Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, lots of news occurring last week in the investment market and lots of news to digest for investors, so let's get straight into it. Turning first to earnings results of Scotiabank for the 9-month period ended July 2018. The company reported earnings per share of just around $2.78 per share, a 3.1% decline from the $2.87 recorded in the prior comparable period, that is the 9-month period ended July 2017. The good news is that total revenues were up just around 5.6% or $73 odd million from $1.3 to $1.385 billion. But an income before taxes or income before taxation was up just around 3.6% from just around $720 million to $745 million. Higher taxation expenses, however, did negatively affect income after taxes, resulting in an overall decline in profit after tax of just around 3.2% to $490 million from the $506 million recorded in the prior comparable period. Now, the revenue story continues to be a good one for Scotia, and as we can see, no surprises here. Retail, corporate, and commercial banking, highlighted in red, remains the major revenue generator for the company, and it recorded a 5.2% increase period on period for that particular business segment. Insurance services recorded a very healthy 9.8% increase in revenues, moving from $121 to $133.1 million. That's in the blue. But of course, it accounts for a much smaller component of overall revenues. And asset management finally increased from 4.1 to 5.2 million. So revenues on the right track. Income after tax or profits after tax, however, slipped because of higher taxation expenses. So at a price of just around $64.94, Scotiabank trades at a price earnings multiple of just around 18 times, in line with its 3-year average of 17.5 times PE, but above the sector average of around 13.6 to 13.7 times. So on the basis of a relatively flat performance year-to-date thus far and above average valuations, Bourse maintains its neutral rating on Scotia. Now, in news of another bank on the stock exchange, Republic Financial Holdings Limited last week made an announcement that it had put forward a proposal to the board of Cayman National Corporation for the potential acquisition of between 51 to 74.99% of the shares of Cayman National. Now, for those of you who may not be familiar, Cayman National Corporation is the largest financial services company in the Cayman Islands and is also listed on the Cayman Islands Stock Exchange. Now, importantly, both Republic Financial Holdings Limited, or RFHL, and Cayman National have advised their shareholders not to take any actions, as this proposal has not been formalized, or no formal agreement has been entered into. Now, taking a look at the price history of Cayman National, on August 6th, Republic did announce that it had entered into discussions with Cayman National, and at that point, the stock was trading at around $3 US on the Cayman Islands Stock Exchange, and it then quickly jumped to just around $4.95 US. And that was the last traded price, coincidentally, on September 12th, when the official announcement was made, and the offer price being put forward to shareholders of Cayman National and its board of directors is $6.25 US. Now, that suggests a very healthy premium over the pre-trade or pre-announcement value of just around $3. So that's a 108% premium. And it's also a 26% premium over the last traded price of $4.95. Now, does this represent good value for Republic and for Cayman National shareholders? Well, on the face of it, it would certainly seem so. Cayman National shareholders stand to benefit from a doubling of their share price in a very short space of time, while Republic Financial Holdings would, if the offer is accepted, would be buying an asset or acquiring an asset with a price earnings multiple of 10.6 times, which is below Republic's own price earnings multiple of just around 14 times. And the estimated acquisition cost, depending on how many shares are tendered, or firstly, if the offer is accepted, could be anywhere between 135 to 198 million US dollars. And importantly for investors, or importantly for Republic, Cayman National is a US dollar generator. Now, finally, quickly, CinemaOne's initial public offering is open as of today. And for those of you not overly familiar with the name CinemaOne, they do own the IMAX franchise at Woodbrook, on Woodbrook Place, as well as Gemstone Cinemas, the first dine-in cinema experience in the country, and they have recently opened their 4DX cinema offering as well. Now, details of the offer very quickly. It opens today. It's set to close, subject to any changes by the issuer or offerer, on the 12th of October, so just about 3 weeks open, and the price per share being offered is $10, and the number of shares on offer is just around 3.088 million shares. So just over $30 million being sought by the equity markets, and this, if successful, this would be the first issue or listing on this SME or Small and Medium Enterprise Exchange of the Trinidad and Tobago Stock Exchange, and that 3.08 million shares represents just about 38% of the company. Now, as more details arise and more information becomes available, Bourse will be conducting its own valuation, so investors can look out for that. And for more information on any of these topics, you can visit our website at bourseinvestment.com, email us at invest@boursefinancial.com, or give us a call at 226-8773 or 2-Bourse. Have yourselves a wonderful investing week. This has been the Bourse Report.